spent a lot of time last year on the banking crisis. How do you assess the current health of the banking industry, especially the mid to smaller size banks that were affected last year?
Yeah, so this time last year, of course, we were very focused on the fragility of some regional banks. The regional banking sector has shored up capital, shored up liquidity, is in a much more resilient shape now than it was a year ago. And so I think most of the analysis suggests that the regional banking sector overall is much healthier. And of course, that's something that we've been monitoring very closely.
Inflation is cool, but food prices are still high. What would you say to Americans who are worried about food prices, and why do you think that the phrase Bidenomics has not caught on?
Yeah, so we are very focused on the kinds of expenditures that hardworking American families make every week. Food prices is very important. We've actually seen several categories of food prices coming down over the last year. So if you look at dairy, it's come down. If you look at fruit and vegetables, so we are very focused on grocery prices for American families, and we are actually seeing prices coming down over the year. But more generally, when we think about the incredible progress in the economy, if you look at it, employment is up, 14.3 million overall, 2.7 just the last year at a time of low unemployment. Wages are up since pre-pandemic, adjusted for inflation. Wealth for the median household is up, adjusted for inflation since pre-pandemic, and small business creation is up. Those are good things, but what the president's very focused on is the hardworking American family and what their expenses look like, how much breathing room they have at the end of the month, and that's where his focus is very much on continuing to lower costs.
Why do you think the phrasing Bidenomics has not caught on?
So I think, again, the president's economic policies are showing great results in terms of real wage gains, real employment gains, real wealth gains, but we still have work to do on lowering costs.
Okay, we're going to wrap it up.
Yeah. Thanks, great. Thanks, Lael, for doing this. So if you run down inflation from since President Biden came into office, overall CPI inflation is up 17.6%. Food, you're talking about, is up about 34%. Electricity is up 27%. So what's your message to Americans who are feeling this every day when they buy and use things?
Yeah, so the president's message is very much he's fighting for American consumers. He is fighting to lower costs. And you can see it on healthcare. Healthcare is one of the single most expensive thing for most Americans. And he has gotten real gains there. Insulin prices down to $35 from $400, negotiated Medicare prices, $2,000 cap on seniors' out-of-pocket costs. We have gotten real gains on things like overdraft fees, bounce check fees, baggage fees, family seating. So we are going to continue fighting. And of course, the president is calling on corporations that were all too eager to raise prices when supply chains were snarled and input costs were going up. Now that supply chains are healed, he's calling on those same corporations to pass those savings on to consumers.
But in that same time frame, when President Biden came into office, real wages are down 2.5%. So people are feeling that pain a little bit.
Actually, let me just update the numbers on real wages. Real wages are up since pre-pandemic. And so,
right, 0.8%
no, as
from
of
February of 2020.
So that's just on average hourly earnings. Real wages are up over 1% for all workers, and they're up over 3% for moderate income workers. If you look at overall purchasing power, people can buy as much as they could pre-pandemic, and they've got $1,700 extra to spend. So in fact, the wage gains have outpaced inflation since pre-pandemic, and of course employment gains are also meaning more Americans are getting those paychecks, which is allowing them to continue spending and fueling the really good growth that we've seen.
We're going to wrap it up. Thank you so much.
Thank you.